Hey everyone, welcome back to Corporate Decoder. Today, JUNS just filed its proxy statement for the 2026 annual meeting, and I'm seeing one major decision that matters a lot for shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is asking shareholders to approve a reverse stock split and a plan to issue more stock, and the reasons why are pretty stark. So this filing is a proxy statement. It is basically a set of documents that companies send to their shareholders before a big meeting. Think of it as an agenda and a discussion guide for important votes. Jupiter Neurosciences is holding its 2026 virtual annual meeting on the 22nd of July. And the main things they want us to vote on are to elect new directors, to approve the appointment of their accounting firm, and two very big proposals related to the company's stock. The first really big one is proposal number 4, the reverse stock split proposal. This means they want to combine all their existing shares into fewer, more expensive shares. They are asking for permission to do this at a ratio anywhere from 1-for-10 all the way up to 1-for-100. The board gets to decide the exact ratio later. And why are they doing this now? Well, it is pretty clear from this filing. They received written notices from Nasdaq on the 26th of February of 2026. The company's stock price has been below $1 for 30 consecutive business days. That is a problem for staying listed on Nasdaq. They have until the 25th of August of 2026 to fix this. And a reverse stock split is their main plan to do it. They also mention their market value has been below Nasdaq's minimum requirement. Let's look at what this means. As of the 2nd of June 2026, Jupiter Neurosciences had over 48 million shares out there. If they do a 1-for-10 split, that number drops to about 4.8 million shares. If they go as high as a 1-for-100, that is less than 500,000 shares. On the surface, this seems like it could help boost the stock price. Historically, about half of companies that do reverse splits end up delisted anyway. Think of companies like Sears or Radio Shack, which went through similar maneuvers before disappearing. For a $1,000 investment, a reverse split with no sustained price increase could mean a quick 20 to 40% drop over the next few months as the market reacts. Then we have proposal number 3, the plan amendment proposal. This is about their 2025 equity incentive plan. They want to increase the number of shares available for issuing to employees and executives by another 5.25 million shares. As of the 15th of June 2026, they had about 6 million shares left to give out under existing plans. Adding another 5.25 million means they are planning for significant future stock grants. So right now, they have about 6 million shares available, but they also have nearly 15 million options and 1.7 million restricted stock units already out there. This increased pool of shares suggests they either expect a lot of those options and units to be exercised, or they're planning to heavily compensate new people. Let's quickly look at the executive compensation. For 2025, Krista Rosen, the chairman and CEO, had a salary of $441,000, plus a bonus of $210,000, Salim Al-Masri. The CFO got a salary of $240,000 and a bonus of $72,000, Alison Silva. President and Koru had a salary of $315,000 and a bonus of $45,000. These numbers are pretty significant for a company with a market cap of only $14 million. What is also interesting is the stock awards. Alison Silva received stock awards valued at over $255,000. Looking at the details, there is a recurring theme of salary reductions during tough times, followed by increases once capital was raised. For example, Krista Rosen's salary was reduced to $84,000 in late 2023, and went back up after December 2024 when they raised capital. This pattern shows a strategy of conserving cash during difficult periods. Now, let's talk about who owns the company. As of May 22nd, 2026, Krista Rosen, the CEO, owns over 13 million shares, which is about 25.8% of the company. Marshall Hayward, the chief scientific officer, owns about 8.1%. All the executive officers and directors together own about 38.6%. This is a good chunk, meaning management has a strong financial stake in the company's success. There is also Claes Wallerstedt, who owns about 6.4% of the company. He is not an insider, so it is interesting to see a significant individual investor. There are also some interesting related party transactions described. The company has a master services agreement with Titan Advisory Services LLC. This company is wholly owned by the CFO, Salim Al-Masri, and his wife. Titan provides financial strategy, forecasting, and accounting services. The monthly fee is $20,000. And Mr. Al-Masri also received an option to buy over 560,000 shares. This is a common practice in smaller companies where outside expertise is needed, but it is always good to be aware of. Proposal 2 is pretty standard. They want to ratify Cherry Bekaert LLP as their independent registered public accounting firm for 2026. This firm has been with them since April 2025. The fees for audit services for 2025 were around $155,000. Finally, Proposal 5 asks for the authority to adjourn the meeting if necessary. For example, if there are not enough votes to pass certain proposals or to establish a quorum. This is a common provision to ensure the company can handle unexpected shortfalls in voting power. So, to wrap up, Jupiter Neurosciences is asking for a lot of important approvals at this meeting. The reverse stock split is clearly driven by Nasdaq's listing requirements. The request for more shares under the incentive plan shows they are looking to attract or retain talent, which is crucial for a small biotech company with few employees. The compensation details suggest a focus on aligning executive rewards when capital is available. What is the story here? It is a company fighting to stay relevant on the stock market, trying to boost its share price to meet listing rules, and simultaneously preparing to issue more stock, possibly for future growth or to attract talent. The decision on the reverse split ratio will be key, and the market's reaction to this news, especially with their Nasdaq situation, will be telling. The risk I am watching is whether this reverse split will be a temporary fix or if the company can truly turn things around. My biggest concern is the ongoing need for capital and the dilutive effect of issuing more stock, especially if the reverse split does not lead to a sustained increase in share price. Alright, that is my take. Stay decoded. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Like, comment, subscribe,